Hi, I'm Florian, CEO and co-founder of LEND.ch, the crowdlending platform in Switzerland. LEND.ch has been operational since January 2016. We've grown rapidly. We serve all types of clients, be it for private loans or also for SME loans. We have done 2 funding rounds and we're now employing 14 people. So crowdlending has been growing rapidly. The average growth rate in Switzerland is around 40%. That was for last year. We see tremendous growth ourselves this year already, so we expect a much higher growth as the whole concept of peer-to-peer lending is coming to more maturity, not only in continental Europe but also in Switzerland. We see larger applications we see all types of applications coming in to our crowdlending platform on both the borrowers and the lender side. As the market is going more and more institutional, more volumes will be funded via crowdlending. If you mix that up with Basel IV, so tighter capital restrictions for banks, you can expect that crowdlending platforms such as ours will continue to grow rapidly. Consolidation is definitely name of the game right now in Switzerland. As you all know, we have a lot of crowdlending platforms out there. We recently acquired our competitor Lendico, and that started the consolidation with that acquisition. And we now have exclusive partnership with PostFinance to distribute our product into the channels of PostFinance. This is vital for us because sourcing for most of the crowdlending platforms is an issue, and cost of acquisition as well. So thanks to the exclusive partnership with PostFinance, we can tap into that client base. International expansion is always on the cards. We somehow, for now at least, believe that it is easier to go into different verticals in Switzerland. So as I said, we started with the student loan business, then went into private loans, SME, mortgages. We think there is more way to go in terms of verticals before we expand internationally. I think it is in a much better position than it was 4 years ago when we really started. Yeah. Also in terms of talent acquisition, obviously when we started we were a small startup, we were self-funded. Now we have funding in place, we're adequately funded to fuel our growth in the future. We do find less and less trouble finding the right profiles for employees. I think that's really interesting. I think fintech associations are very helpful, particularly when you're looking for funding. It gives you the opportunity for a startup to be on stage, connect with potential investors. When you bring all the investors together in one room, it makes kind of the go-to aspect of getting funded much easier. You get intros, and also you meet other fintechs, which I think is always tremendously helpful because we will and we are already working with other fintechs that offer services that we can combine into our services and that make absolute sense. So yes, obviously for us the PostFinance acquisition is a deal breaker. I mean, that is a milestone in our corporate history, and with that we now have an acquisition channel on the sourcing side that is very large. And if we connect that sourcing with the institutional investors that we have on the other side, you make peer-to-peer lending a completely different ballgame. I think we didn't really have that many challenges raising funds for our first 2 funding rounds, so the seed and the Series A round. When it now comes to the Series B round, we see that there is less and less people around, so it gets a bit more challenging. I think it would be really helpful for startups that are in a more seasoned space or in a more growth area to maybe also with fintech associations do startup events for startups that are not at the very early stage, because they're I also like them. They're very interesting. You see all types of new business models and crazy things. Yeah. But I think it'd be really helpful for companies like ours that are already a bit more mature, and that they can find a platform where they can meet investors who are probably investing at a more mature stage. It definitely helps to have that local solution. Yes, Entrepreneurs Fund is definitely the right step. The question I would like to address here, and while I'm talking to Cal on camera, is obviously if you're a large fintech fund or if you're any large fund, you always look for a unicorn. And I do understand that it's appealing if you have unicorn valuations when you do an exit.
Right.
But I think even in Switzerland, if you do a Swiss-based model, if you do it well, you will find some nice valuations.
Mm-hmm.
And probably, I understand there's always you have to take a lot of risks to get the high reward. But maybe address some funds, or if there are some funds who look at a more balanced strategy, that they can say this company is already profitable. Now it's just investing a bit more money to make more IT, modern IT applications, and bring it to the next growth. And then you have profitable companies in Switzerland that operate in Switzerland, who could be potential takeover targets for international players, or just be a nice private equity story that just continues to make cash. Particularly when you look at the exits that happen in Switzerland. Most of the exits in Switzerland are actually companies that operate in Switzerland. Of course, there's guys like Get Your Guide, who haven't exited yet, but who are obviously large international players. But most of the stories that you look at, if it be domestic business that gets taken over by a trade buyer, I think they're really interesting plays, and probably do not take as long to really liquidate positively for the investor as do the unicorns or the potential unicorns. Yeah, I mean that Money Park is a perfect example of how you can operate in Switzerland, and it can be a really good exit story for a trade buyer. Like in our case, if we manage to now tap successfully into the client franchise of PostFinance with institutional money that funds all the SMEs, then that is a tremendously positive story for PostFinance, because it couldn't be any better partner for us, because PostFinance is not an official bank in terms that they're not allowed to lend. So when you run the platform well, you can be a bank without being a bank. So, and on top of that, you don't have to comply with all the Basel IV requirements that are coming up soon. Yeah, definitely. I think that the days of being a pirate and saying, hey, we're gonna kill the banks, these days are they're probably gone in a sense that as a fintech startup that coming back to cost of acquisition, you're using the network of existing players to sell your product. And I think there couldn't be any better way, because the client has already a standing relationship with the existing player. Most of the time they have confidence that the existing player still will exist in a few years, which is maybe something they don't have with a fintech. So, and then if you then can plug into that existing network, that is probably game changing.